Hi, this is Jonathan with the Strategic Multifamily Investing Podcast, and today's guest is Dan Kay. He's an active real estate investor and fundraiser, leveraging self-directed accounts, so that's the self-directed IRAs and the solo 401ks, to create diversified real estate portfolio yielding double-digit returns. He specializes in self-storage investments, multifamily, and hard money residential properties. Dan has personally raised millions of dollars from family offices and individuals and empowered his officers to raise seven figures on multiple occasions. So welcome, Dan Kay. How's it going, man?
Doing good, sir. Thanks so much for having me, John.
Absolutely, absolutely. Now, we met at one of the multifamily investing podcast, well, not podcasts, conferences not too long ago. But we're here now, and thank you so much for being a part of our team over at Red Boot and helping us to kind of talk about this IRA 401k thing. So before we even begin, how did you get involved in the IRA, the self-directed world?
Yeah, so it's funny. I was a co-best man in a wedding on the coldest, shortest day in Staten Island. I really can't make this up. And, not literally as our buddy was walking down the aisle, or probably 5 minutes before, I said, hey, what do you do? He says, I flip houses. I said, that's interesting. I nod my head, and then I hear 15%. My ears perk up. And then he says, did you know you can use your retirement dollars? And for me, this was like, whoa, the sea parted, as they say. And, that was my introduction to knowing that I had full access to use my retirement dollars. So, fast forward a few years, I'm on a plane ride to Money 2020. Henry Yoshida, coincidentally, is there right after his company was sold to Goldman Sachs. And I say, hey, Henry, just curiosity, ever look into self-storage? Any interest in that? And I'm like, did you know you can use your retirement? And Henry's 100 times smarter than me. So he's like, sure, dude. But in his mind, I think he probably thought, wow, well, imagine if we eliminated all of the friction that historically has been in these accounts for the past 50 years. So as I call it, it's, country club cool that you can actually, open an account, tell your friends, have full access to your money 24/7 and invest in what you want, when you want. And that was, kind of the transformation of where I feel this broad self-directed industry is going.
So is this kind of what they call the checkbook IRA, that kind of thing? And if so,
Exactly.
could you define the difference? That friction. There are two types, obviously, here. So talk to us about that.
Yeah, I appreciate the question. So there's two types. So historically, and I say these terms specifically, you had a custodial SDIRA and then a checkbook control self-directed account. So let's talk about the former. So the former was, as it sounds, a custodian. It sounds kind of a little old, stodgy, for you to get access to your money. Let's say, I'm sure you guys see this at Red Boot. You have somebody that says, every quarter I'm going to chip in 50K. So you take their check. It's great. It's easy breezy. It seems with the old way, you would have to fill out, myself, let's say I'm an investor in Red Boot. I would have to fill out paperwork. And then you would have to share docs. And then probably a new third-party customer service rep would look at these without providing any sort of value add. And you and I would be stuck on the phone, even though all I want to do is give you 50K for your next deal. And that's basically custodial. Now, checkbook, as it sounds, it's just like with your piggy bank checking account, the old school checkbook. I can write you a check when I want. I can ACH wire you money when I want. So that's a checkbook portion, which is tremendously powerful. The best analogy I give to folks new to the investing space, it's like your HSA account. You need surgery, your kid breaks his or her arm, go to the hospital, you want to get all prettied up, get manicure, pedicure. Sorry, that's below board. The regulations are very simple, what you cannot do. So with that, we found literally everybody that has reached out, in the last few years with Rocket Dollar, for example, respects the regulation, can take the checkbook control, and then wisely, in an above board way, invest in what they want when they want.
So then you guys provide guidance for that over at Rocket Dollar of what those regulations are, because, I've heard a lot of people scary things about checkbook IRAs and, just that education. You guys have consistent education as well about, any changing regulations, correct?
Yeah, we do. And so fabulous work by the team, Brendan Walsh, who leads our knowledge base. It literally was voted one of the top, in the world, because we are up to speed. We've We talk about real world situations, real questions that come in. And this is probably over, not to lie, 30,000 conversations,
Oh, wow.
chats, etc., that we put this together. Yeah. So, and then also as folks are talking, being that what's unique, I think, about us also, and I'd say some of the newer companies coming on board, a lot of us, we've played in the sandbox. We've had these accounts personally. We've raised money personally with these accounts. So with that as a background, if you're coming to me or one of our listeners coming to me for the first time, we can be pretty open on what you can or cannot do. So somebody says, "Hey, I want to do cannabis." Well, we know that's a no-no, and with
Wow.
Washington D.C., good luck getting anything passed even in normal times. So, but if somebody says, "Hey, I have a buddy and he is a multifamily, can I put in 50K from an old Roth account?" Well, yes. Here's how you can do it.
So you guys do conversions and stuff as well. So what types of things are people buying? Obviously,
Mhm.
here we're interested in multifamily investing. I've read a couple things you're doing, storage. What kinds of
Mhm.
things are you doing or that you've seen your clients do as well?
Yeah, I mean, the sweet spot here is still real estate, and I don't see that going away. So historically, this was a lot
Okay.
more for real estate, and you know what? Frankly, it still is, and it usually is an LP investment. So for folks on the call that don't know, it's almost like when you think of when you invested in a stock. You really don't have control. You're not on the board of directors. You're not managing. You have faith in the performance of the company. Now, what I like about real estate, you're not one of millions of investors. You're probably one of 10 or 20. You probably have you should have a personal relationship, or at least a phone call, if not more, with who you've
Right.
dealt with. It's probably in your community. You can see it, feel it, touch it. So you have this full, once again, checkbook control and authority, backed by your money to invest in what you want when you want.
Okay. So then I've seen on Rocket Dollar on your podcast, is there some people who are investing in Bitcoin and things of that sort as well?
Yeah,
You guys allow that kind of stuff or?
we do. So it's more what's allowed or what is not allowed. Double negative here. As the sun's coming in, the Austin Center,
Gotcha.
folks. So if I look like a half joke, this is my better half of the face if we're going live here. But sorry, I guess sorry about that. But
It's
yeah,
all good.
what we do see is on the crypto side. In Bitcoin, yes. So as I said, the IRS says, let me just take a little step back, what you cannot do. So no life insurance, no collectibles. And the big thing is no self-dealing, which means
Okay.
you cannot say invest in your primary residence, your own startup. If you have, I know for your audience here, in DC or, Maryland, you cannot buy a flat at Georgetown and then have your son and daughter stay in it.
Right.
Everything else pretty much is in play. So what we've seen, you are seeing a bit of a shift. Bitcoin and some of these, I'd say, funds that are supporting, Bitcoin to a point gold. The answer is yes to that. Being that it is checkbook control, you do have access to give personal loans or peer-to-peer loans. So I think especially in these times is, called second quarter 2020 and beyond, I've been saying for the whole decade, folks are going to say, yeah, maybe I do want to support this female entrepreneur down the street.
Yeah.
Because I love her mission, I respect her, but then also when she takes this money, it's not only going to help her business, it's going to recycle in this, as I call it, micro community. And that's part
Yep.
of, I think, kind of our background mission of this massive $10 trillion that I say sitting on the sidelines can be active into your community. So your multifamily, the little store across the street, the startup, your buddy's really wise Bitcoin guy is a Bitcoin fund. You can go with that. And that's kind of, we're seeing many folks with this, I'd say, newer sort of 21st century diversified portfolio.
And I think that you hit on something there, because there are a lot of small businesses that are going to be impacted right now. You mentioned this is April of 2020 when we're
Hmm.
recording this, and so you've got the COVID-19 situation. We're still in the
Hmm.
middle of being stay at home
Yeah.
order that's nationally, and that depending on where you are, there's probably even stricter guidelines about staying at home and locking down. There are a lot of businesses that are going to be impacted, and some businesses will never open up again. But
Hmm.
if you have a self-directed plan, it could be possible that you can reinvest or reinvigorate some of those local small businesses that you've come to grow and love, within your own
Yeah.
community using self-directed money. So thank you for pointing that out. That's
Yeah.
really important.
And
So
Jonathan, that's a great point. If you don't mind, real quick, just
no,
to
go.
also for folks that are self-employed or may find themselves self-employed, but with a fair 401k, you not only the SDIRA, which is kind of the Gatorade term in the space, the
Right.
solo 401k, which is more powerful from a contributions up to 56 or 62,000 a year, times that by 2 if you're married, but then also the ability to borrow the lesser of half the value of the plan or 50,000. So let's say you have a 100,000-year-old 401k, you have an idea now to go on your own, but you don't want to raise money from your friends and family or ask for a loan. You can actually borrow up to 50,000, so as long as you pay it back over 5 years. That's very powerful. That is in the solo 401k, so you need to be self-employed to qualify. But I do feel a lot of folks, even before call
Yeah.
it modern, hyper modern times, a lot of folks were moving to have a side gig or something that would make them eligible. So just to be aware of that there is a pretty sizable amount that somebody could tap into. Almost as call it your personal working capital, which so kind of my little PSA for the day based on
No, that's good
employment.
because there's another question. I'm sorry, did I cut you off there?
We're good, man.
Okay, so there is another thing for investing in multifamily properties. Some people,
Hmm.
had, historically, they're doing fix and flips on residential. They use the self-directed IRA, but if they're doing, investing on multifamily, there is this component of UBIT that could potentially
Hmm.
come into play where you don't want to use. First of all, let's define what UBIT is, and then how do you overcome that moving from a self-directed IRA to self-directed 401k? A little technical here, but this is something that
Yeah.
I think that people should know about.
So I'm going to answer as an investor, because I mean that's what folks on the
Okay.
call ultimately would be. So for me, and this is I'm in the tens and dozens of deals.
Mhm.
UBIT has. I also have a solo 401k and an SDIRA, so I want to preface that. UBIT has never been a factor in any
Okay.
way, shape, or form on my returns. Now, could it be yes? Should you speak to your tax attorney before, and also maybe the sponsor, particularly who's aware of how it was set up, how cash flows are going to look. Yes, you should. But in general, I mean, if from my experience as I'd say a wise GP or wise operator, there really should be no concerns for you. But if anything, for both their personal benefit and also the cash investors, the non-retirement investors, to take the depreciation and such benefits, there's not even going to be income to consider from that standpoint.
Okay.
That said, all else equal, if you do qualify for the solo 401k, and just to be clear, for either account, it's not, a lot of folks are not contributing a lot on day one. It's more from rolling over or transferring from your, as I call it in layperson's terms, your old 401k from your old job.
Okay.
So all else equal, yes, if you can be in the solo 401k, there's so many more benefits, go to the solo 401k. If not, yes, there's a slight chance, for the UBIT. I just personally, myself, and a lot of folks I've talked to, it really hasn't impacted their returns in any way, shape, or form.
So I guess one of the things that we need to define is UBIT is the unintended business income tax, right?
Hmm. Yeah.
And it's you run into that situation when an entity that you've been working with somehow or another generates. I can't. Can you explain what that is again? I just want to make
you
sure.
know it's kind of a long, and I want to make sure you and I don't misstep, because as I said,
Okay.
ultimately it's kind of how the sponsor is setting up and what their full plans are. And so there's a whole lot of
Okay.
I said my general answer as an investor is no. On our, so for rocketdollar.com/learn, we'll go into deep detail on what this is, but ultimately I think it's just a discussion you have if it is a concern, with the deal sponsor. But I mean, from an investor standpoint, pretty rare. So I'll just
Okay.
keep it at that if we could.
Cool.
Yeah.
Not a problem. So now moving on to, I guess, the future. I mean, right now,
Yeah.
some things are, people are thinking that the, stock market is crashing. Yeah, I'm pulling my money out. Things are pretty
Hmm.
bleak. But for a lot of people, this is a great time because, again, as you mentioned, there's $10 trillion worth of investment money that's tied up in other accounts that could be liberated to help
Hmm.
out, neighborhoods and things of that sort. What are some of the things that you see moving forward? What excites you about the future here with self-directed or even in the real estate?
Yeah. So, I was saying this is even in February and last year, I said, what I hypothesized was happening, that the stock market was going to drop significantly and real estate was going to stay on their great, especially the yields, called the 6 to 10% yields. A lot of folks, multifamily, say sponsors are paying, are going to continue. And, we're still seeing that today. And I think even with, sponsors that are doing right by their tenants, you're still seeing, even if it's a, especially an A, B, or D property, the C, you might, which is basically the, the working class, if they are truly shuttered. All I would say, as I look out my window here, there's 100 plus construction workers. The governor of Texas said, yeah, real estate goes on. So, my little microcosm, it's, at least for here, wherever these folks are staying, they're still paying their rent. So, but that's it across the country. I do recognize folks kind of that probably stay in the multifamily C. There could be potential default or even some rent forgiveness. That said, I still feel it's more of a short-term sort of thing that's not going to. So basically, once again, from as an investor to a fellow investor, for those listeners on the call, I would say, yeah, maybe you get dividend paused one quarter, but be graceful, be sensitive to it. But in terms of values and ongoing continual dividends, I think we're going to be fine. So with that, multifamily still excites me. Niche such as self-storage and RV parks, I feel self-storage is also very recession-proof. I should say recession resistant is the official term I'd like to use, because when times are good, people like their cleanliness, like to have their space. They forget about things. And, when times are a little bit tougher, maybe your rent goes from 2,000 to 1,000, but then you really do need to put your stuff somewhere. And a similar thing, I think, especially the boomer generation with mobile home RV parks, that was becoming called the sexy asset class of the 2020s.
Okay.
I'm seeing a lot more investment coming out, through here. So that's sort of really exciting. And then, even for folks in multifamily that may, people are buying like a land grab, buying a parcel of land, like take the folks at BV Capital, Bridgeview Real Estate up in Dallas. They're also saying, well, maybe we could do some industrial here also, or what can we do on this kind of large plot of land that, faces the highway, easy for folks to go on. So, a big operator may have your typical multifamily, and that's something more of an industrial warehousey, on a very, call it, broad project. So in the real estate world, that's exciting to me. In terms of with any startup, of course, true high risk, high return. I would say do your diligence. But for example, there's a biotech company. This gentleman already exited for $1 billion across his past 3 companies. Wow. Trust me, you don't want me to be your doctor. I think I clipped the head off the grasshopper in Bio 1 in 10th grade. So actually, I've done more bucks. So I represent proud here in my high school today. Yeah. So with that, I do think there's opportunities, but like anything, look at your portfolio, much like from a risk return sort of view. But especially for you, Jimmy, some of our older folks are like, wow, the CDs are down to 1%. Dividends are probably going to be clipped on some of these companies. I think multifamily is a fantastic way to go.
That's awesome. So how do people get in contact with you? I mean, we've used it through some of your time here. Yeah.
So, rocketdollar.com/learn will take you to our knowledge base, kind of anything for like deep Q&A. My last name, we'd be here for the next 2 hours if I try to spell it. So let's just say Dan, DAN, at rocketdollar.com. And, likewise, I'm from Philly, so spirit of brotherly love here. Here's my $100 bill, my allowance for the month there, even though we can't go out. And but as I say, if you can spell it, you can get it. So D Kryzanowski, DKryzanowski will get you $100 off your Rocket Dollar account. But and likewise, I think there's a lot of great conversations, Jonathan, that you facilitated in the Red Boot community, and Michael Blanc and some of our, fellow mentors and folks we admire out here. I would say to the investors out there, just folks interested in the space, now's a really good time. That I'd say folks that charge a pretty penny, deservingly, are doing free webinars. So I've kind of taken it upon myself at least a few times in the week to really get educated. And these are real rock stars that, are definite servant leaders and graceful, but, it's just usually you're flying to visit them or to be at a conference. You can get this from the comfort of your house now. So I would say that's for folks looking to come in and who you'd want to, be with, I'd say, maybe tag along with, one other folk just locally here, although I can't see anybody these days. Another gentleman, David Thompson, likewise was one of early friends with Joe Fairless. He's done a lot of, his book is Riches in the Niches. So although I would strongly suggest multifamily, I'd say in addition, as I said, the mobile home RV parks, recognize the silver tsunami of older folks that want to live nicely. So I would say as, somebody coming to the table, you have the ability, in chunks ranging from 10 to 50K to really be with multiple operators and to diversify within real estate. So, I appreciate everything Red Boot's doing to contribute and help with this.
Well, thanks, Dan K, for all the information you've given us. Hopefully we can get you back for one of those webinars. We can go do a little bit more of a deeper dive in the that self-directed space. But listen, thanks again for all your time. Stay safe and healthy. And thanks again for your time.
Awesome, my friend. Cheers.
Cheers.